Hi, this is Nick Inman from VolumeProfileTrader.com on Monday, November 14th, and here we're going to cover the S&P 500 and a few other names. So today in the S&P, we talked about on Friday how over the weekend, how on Friday we have a potential top due to trendline resistance, which I'll show you in a bigger time frame, and also how the market closed. And we got some follow through to the downside, but I was looking for a buying opportunity. I think we may have gotten it today. If you just look, this on this 4-day chart, we had this consolidation zone 4 trading days ago, and with a point of control at 1244. And you can see today the market, it traded lower and tested that consolidation zone, and basically from there, once it got into those levels, it was rejected, and we got a nice push higher. Not in a matter of a percentage move or whatever in the S&P, but it was a significant bounce relative to how we traded today, which was a relatively tight range. Based on what we've seen in the last month, actually really the last 3 months. So it was a really small range, but I like the way the market closed. Our point of control formed at the bottom, and I was talking with another trader today and discussing how this looks good going into tomorrow, so long as there isn't any macroeconomic news that, or any debt crisis news that comes out overnight that pushes this market lower. But I found myself buying a decent amount of things today, and we'll cover that tonight. And nothing major in terms of full-size positions, but definitely scaling in and getting involved, looking for this market to break out to the upside. So I was buying this weakness, and hopefully over the next couple days we'll see push higher, 2 new highs hopefully. So as I zoom out, and I know I've covered this a lot, but bear with me, we had our uptrend, our stopping point at 1289.25, and since then we have gotten higher lows and lower highs. We're seeing this triangle pattern. This ended up being resistance, and just connecting. We can even draw it like this and consider it a resistance zone and support zone. And basically when the market gets in this zone, you want to be looking to buy, because every time it's been an opportunity. Likewise, when it's reached this resistance zone, you be a seller. Well, we're close to the apex, and what that is telling me is this pattern's either going to just not work out and we're just going to continue to move sideways, or there's enough built up pressure in this to where the volatility has come in enough, and the upside volatility hopefully pushes this market out to the upside in a nice move where buyers and fund managers, they have to chase for performance, and so they're bidding the market higher, allowing for good opportunity. But the way this is set up to where this point of control for this 30-day range has price is still below it, or I'm sorry, price is above it, and now it's if price came down to that level, to this support zone, it would also be that point of control, and that would make me very eager to be a buyer on anticipation of an upside breakout. So you can see that this looks poised to break out, but we're still waiting and seeing. It's important to be involved in the market, though, to the long side, because if it does break out, you'll be able to easily add to positions. So it's one of those things where have a little bit of skin in the game. Don't pile in, because that doesn't make sense. What if this thing just falls down and it looks like a hose with running in the market's pouring water out the end? That's what it will look like if this fails. But until then, our trend is still to the upside for now, and we're looking for more upside from here. So let's look at the the NASDAQ and the Dow also. So the NASDAQ, you can see the picture is a little bit different. We've really been trading sideways, and we've had, not really lower highs. You can really just say that we've been stuck in a range. But recently, we have had, if talking about today and Friday, the lows have been lower. It's definitely, this is definitely a lower low relative to this. Whereas on the S&P, it was more, it had no problem getting back up to the resistance. Even though the resistance was a downward sloping line, it got up there. So it's a little concerning that the NASDAQ is struggling, but what we're looking for here is we still like the point of control at 23, let's call it 2300, but there's heavy volume up here also. If the point of control forms at this range, 2350, and starts to roll over, I'll be a little nervous. It's one of those things where you're looking for the point of control as a pivot prior to a breakout one way or the other. So this is a little bit concerning. We want to see the NASDAQ push above this 2360 level and at least back up to the 2390 level, 2400. That'd be good news. The Dow, on the other hand, looks pretty solid. We're seeing a decent bounce. It's the most constructive in terms of potential upside. And we see, if we just draw our support zone again, you can see what's going on here. We're getting this triangle pattern. This one looks a little more, the trend is definitely more higher. It's not as flat as even the S&P. So what we're looking for here, we look at this whole moving average, it's starting to point up. That's good news. And if it came down below 11,800 on the Dow, I would be a little concerned. Though what it would mean is we've gone from a potential breakout to the upside to more sideways consolidation. Although people will be sellers if it starts to break down, so watch for it. But this looks poised for a breakout to the upside. And I want to cover oil also, the oil futures, and what we're seeing here is a test of 100 and a failure for now. One thing I did, full disclosure, is I bought some, I believe it's let me check just so I can see the strike, 38 puts on the USO, 38 December puts, and I'm not looking for a home run, but I'm looking for a retracement, hopefully down to 36 on the USO, which is a decent move, about 6%, but with an option position with a delta of, I believe, around 0.5 or 50. It should appreciate. It should get close to doubling, or at least between 50 and 100% gains on the option. But what we're looking for here is some kind of reversion back down to this point of control level. As I bring up oil again, which is the more important name to look at, USO, it's flawed in its construction, but a pullback to 94 to 93 on oil would be a positive move. That's where I'll be taking profits, because that's probably where buyers will be interested in buying back oil, basically. And then your other level other than that is 90 and then 86 on oil. But we've reached that important resistance level that I talked about. As you can see, our rally off of $75 on oil, we reached that $9,800 level, which I talked about. It's a 6-month almost like a 6-month pivot level, but it has that point of control range. So we're looking for a little bit of rejection, similar to what we saw with the euro back at its 6-month point of control range. And you can see the move it had off that point of control, just to slam down and back to lower levels. So there are mixed signals in the market, because generally speaking, when the euro rallies, the U.S. equity markets rally, and also oil tends to appreciate when the market is rising. So the market oil being at potential resistance, and the euro just really struggling to hang on, it could be bad news for the market. But we are looking for an upside breakout, and it's important to stick with volume profile and let it determine if you should, how you should be involved in the market. So it's still telling us we're in a bullish phase, just a consolidation pattern, just waiting for the consolidation pattern to come to maturity and break out one way or the other. Hopefully it's the upside. So let's cover some more names. Another important contract to cover is gold, and what we're seeing here is this point of control form at the top of the range, and this is for the month of November, and this could be important. It could be a topping pattern, because not only is it the top of the range for November, but it's the point of control over the last 3 months or so. So it's an important level to watch. Although you can see, looking at the whole moving averages, they're still pointing straight up, so the trend is higher, but we do remain in the range that I've talked about, which on the GLD, it is the 169 to 170 on the downside, and this 174, 175 on the upside. So we're pounding at the top of the range, but it's really a do-nothing hold. If you want to take some money off the table, that's fine. But generally speaking, this looks like a topping pattern, but I can't really say that with gold, because it's just still in a massive uptrend, on a 10-year scale. So I would say, recommend it's a do nothing. It's not a buying opportunity, but if anything, it's closer to a selling point. But we've seen one sell off that was immediately bid back up, so it's really a do nothing. Another name I want to cover is Walter Energy, and I bought some 82.5 calls on this name today, and what I'm looking for is basically a move higher, a move out of this range that's been stuck in. We see the big downdraft it had back in, it looks like that was July, and it's done nothing but basically pound out a base since. You can see we kind of have this pattern going on where it's reversing, and we're looking for some type of upside move. You can even, not really draw a line there, because it's not necessarily proper. But what I like that's going on is, on a market that was down today, Walter Energy was up nearly 5%, and we're poking its head up above the point of control for the last 3 months. If I zoom out a little more, you can see the massive downtrend it has. It was in the mid 140s, but it's pounded out a base, and on a 1-year chart, or a 2-year chart, this is still at its point of control, still hanging in there, and it's a great company that has exposure to China. It's a takeover candidate, and it looks like it can be poised for a move higher. The reason why I bought the 82.5 calls, 82.5 calls, is because there was a lot of option buying at several strikes in December, along with the 82.5. So I'm looking for some upside leverage. I'm looking to take this position off into strength. To also inform you, I also bought some shares today of Walter, and that's more of a longer term view. So the 82.5 calls, that's for a trade selling into strength. Hopefully around $85 I can take those off, which is another $10 higher from here. So hopefully those options double, but the shares are for a longer term view on hopes that we can get Walter Energy back up to the $100 level. So that looks like a pretty good opportunity. Almost right here, right now. It makes sense to start scaling in. Here's another company that I've been covering, DDI Corp, and it's a fast grower. if you don't know anything about it, I would suggest reading up on the fundamentals. But from a technical standpoint, it looks poised for a potential move higher. You see that it's stuck in a consolidation pattern right at the point of control over the last 2 years, and we're looking for some type of upside breakout. Even though it's already had a nice run from basically sub $7 to $9. These names tend to move a lot. You can see it was back at $3.80 at the beginning of 2010 or the end of 2009, and it rose. It quadrupled, and not quite tripled. So it has that potential, but as far as upside potential, there's at least $1 in upside potential, maybe $1.50. So there's opportunity in this names. We want to keep an eye on it, see if it starts poking its head up. If it does, start getting involved. But this thing could always roll back over. Don't take it off your radar, though. I think it's going to be a winner. Okay, I got to cover Apple because there's so much talk about it, how it's declined. We've been on this. We've been waiting for that development to occur, and we're getting that. But now we're at a point where this may be a good buying opportunity. Over the last 3 months, we've had a point of control form at this bottom of the range. Apple touched it today. Sorry. As you can see, it touched the point of control today. And it didn't. I mean, it bounced, maybe $1. It's nothing serious. But think about it. It's gone. Markets ebb and flow. Stocks ebb and flow. They, down, up, up. You get the idea. So we've had a down move, and we're at potential support. So what we are looking for now is a move higher. Now, off of these levels. Now, what's our target? Well, unfortunately, there's not much upside in this. We have definitely some resistance. So a move back to 395, 400. That should be your profit. Your target profit. And so maybe a trading opportunity, if you like to trade options, is the 385 by 395 call spread going out to December, if we see a bounce. So wait for the buyers, and if there's buyers, and especially if we make a higher, basically print higher levels than today's intraday high, which was around 385.30. If we see levels higher than that, then I think it would be appropriate to put on some type of call spread. You could even do 390 by 400, but I think 385 by 395 would better suit your needs. You could even do 385 by 400, but it's I encourage to take any position off into strength, and I think I think we're poised for a bounce in Apple, but you never know. We could trade below this point of control and back down to this multi-month or multi-year trend line in Apple, which you can't see it on this chart, but you can see that Apple stayed above this line that I've drawn. It's just simply connecting the lows. So we'll see if it comes down to those levels. It'll be even more of an interesting opportunity. 363, that's around the level. So 379, which is the recent lows. So we're basically looking for a bounce tomorrow in Apple. If not that, then 363 is your downside target. So to wrap this up, the market, it's still in its bullish phase, still in consolidation, but it's consolidation within a current uptrend. We see our pattern, we see our support zones and resistance zones. We also see the market currently bouncing off, the S&P currently bouncing off November's point of control. We're going to see if this support holds. If not, it's back down to the 1235 level, plus or minus 5. And then from there, it could be a breakdown test of 1210 and below. So let's hope that this November point of control holds. It's also the 3-month value area high. So it's an important level, and we need to see follow through. And if we don't, well, that's the market's telling us what it's going to do, and it's probably relative to some type of overseas risk, whether it be Europe or whatever. So anyways, guys, I hope this helps. The website should be ready to launch by the end of the month, most definitely. Hopefully by the end of this week. So I hope you join us for that. It's going to be a great service, and let's get them tomorrow.